Hello everybody, this is Books of the Stock Market. How's everyone doing? As for me, it's going pretty well since this week is a shortened week due to Independence Day. Other than that, not much has changed, so let's go into the video. This video will be explaining the case for lengthening cycles. The model we'll be looking at is the KS model, and this model is pretty precise as it has everything labeled from days when the halving started to any black swan events. Through this model, he describes why he believes Bitcoin is going to peak on May 22, 2022 at a price of $486,000. This is pretty out of the ordinary as most people see Bitcoin peaking at the $100,000 to $200,000 range during the months of September to December. However, through this model, it does look like this is a possibility, so let's look at his claims. But before we get into the charts, let's see how credible this guy is. It looks like he studied actuarial science, which is the science of managing financial risk. I don't think he completed it, but it looks like he was pretty good at it since it said he won a scholarship. He then went to Deakin University where he completed a bachelor's in finance. There, it looked like he was a pretty good student as he got different awards due to his grades. He then became an analyst at this place, which I can't find any information on. It also looks like he got an honorary PhD. After his education, it looks like he started off working as a freelancer for different asset managing companies. After that, it looks like he left the company and became the founder of the place I couldn't find any information on. Overall, it looks like he's good at math, is from a finance background, and seems to be doing his own thing for now. Now, let's look at his chart. There's a lot to look at since he basically labeled everything, but I think I found a coherent way to explain all of this. Let's first start from where this guy got a price target of $486,000 by May 25th, 2022. He got May 25th from calculating the percent difference between the days it took to hit the 2013 market peak and the days it took to hit the 2017 market peak. As shown in the graph, it took Bitcoin around 369 days to hit the 2013 market peak. On the other hand, it took Bitcoin around 525 days to hit the 2017 market peak. The percent increase between 369 to 525 days is 42.28%. He then added this to the 2017 market peak to hit 747 days later, or May 25, 2022. As for the price of $486,000, it looks like he made a trend line using the peaks of 2013 and 2017. Overall, there's not enough data to truly show this is going to happen for certainty. The only thing we have going for this model is that we seem to have hit a longer than usual consolidation phase during this bull cycle. But once again, even models with lots of data are always adjusted and broken as new data comes out, and this model provides a good perspective how Bitcoin is experiencing a lengthening cycle. Other than his price target and date projection, he does have a lot of stuff in his model, so let's go through all of them. I think the best way to look at this is by going through this list. Let's start off with number 1. He explains that he is a statistician, an author, a trader. He also explains his YouTube channel goes over Bitcoin and alts, which I have linked in the comment section below. However, this is where the important stuff starts. Numbers 3 to 6 represent what he has labeled in this graph, so let's go down the list. For number 3, we see that he states that the bull cycle has 3 psychological states. I think the 3 psychological states are associated with Bitcoin capitulating, consolidating, and going straight up. He does have surrender next to the 2 other terms as well and in the same color, but I think he's using surrender to describe this huge drop when we saw COVID and the US liquidity problem hit. Anyways, these 3 psychological states are pretty straightforward as capitulation happens when we hit the bear market and Bitcoin price tanks. I'm guessing he believes that during this time people are psychologically unwell as they just saw Bitcoin drop by over 50%. The next phase would be the consolidation phase as people start to accumulate in preparation of the next bull cycle. From a psychological standpoint, I don't think there's a lot of anything as people are just stacking their stacks. I think the 3rd psychological state is pure euphoria when we see Bitcoin make its exponential move upwards at the peak of the bull cycle. Moving on to number 4, we see that he states that all of this is due to the halving. The halving is when we see the reward for mining cut in half. This sends a supply shock as there's less Bitcoin produced. Since there's less Bitcoin around, it causes Bitcoin to grow exponentially. This growth is when we see Bitcoin peak in the bull cycle. As shown in these blue lines, he indicates when the halving occurred. In the 2013 market peak, the halving occurred on November 26, 2012. In the 2017 market peak, the halving occurred on July 8, 2016. In this year cycle, we see that the halving occurred on May 9, 2020. The 5th point is the black swan events. He has labeled all these black swan events with these red lightnings. As you can see, these black swan events are usually represented with a huge red candle. This makes sense as the events are unpredictable and they also have a large enough impact on the global economy to cause a sell-off in Bitcoin. The most recent one we saw is the one we saw on March 12, 2020, where we saw the news of COVID, Black Thursday, and the US liquidity crisis happen. However, the important thing about all of this is that the recovery after each black swan event is very fast. As you can see, after each red candle, a green candle is formed, and since this is a 3-day time period, we can assume that Bitcoin seems to repair itself fairly quickly. Sometimes it may take longer as shown in the most recent Black Swan event, but whatever the case may be, we always see Bitcoin recover after a Black Swan event. The final points are the Bitcoin properties he talks about. In this blue square, he talks about the different properties of Bitcoin. The first point he brings up is that Bitcoin is not a linear asset but an exponential asset. This is due to the halving that occurs, and this is why we always see Bitcoin make these extraordinary gains during the bull cycle phase. The next point he brings up is that Bitcoin is not a stock. It is not a stock because you can't buy stuff with a stock. However, you can buy stuff with Bitcoin, and that is what separates it from a stock. Furthermore, it is deflationary as there is a fixed supply of 21 million Bitcoins. This means that it is not like fiat, which governments can just print at their own discretion. Third, he says that Bitcoin is decentralized. This is pretty important as no central government or banks, as a matter of fact, can rig the system. The fourth point he brings up is that Bitcoin is the first internet money. This internet money is safe and secure. And the fifth point is that this is a global medium exchange, which means you do not need to exchange currencies as there's only one Bitcoin. This means that it is a global store of value and it allows for low-cost global transactions. Finally, since Bitcoin is based on the internet, this is the best asset to invest in as it directly serves as a way to invest into the internet. Well, that's all I have to say about this model and lengthening cycles. But before I end this video, I thought I would do a little portfolio update. Here we have Bitcoin. We see that Bitcoin is down to under $35,000 after briefly hitting the $35,000 mark. Currently, we see Bitcoin retesting some trend lines, so I believe that this little dip would be very short-lived. As for me, we see that I'm down 20% off this trade. As for Ethereum, we see that we are back above the $2,000 level. Ethereum seems to be enjoying Bitcoin going above some resistance levels. We see that I'm up 261% off this trade, which is not bad, because I think last week I said I was only up 200% off this trade. Finally, for Bitcoin, we see that we're at the $140 level and seem to be mimicking Bitcoin a lot. We see that we're down around 14% and seem to be doing better than last week. With that, I'm going to end this video. If you liked this video, press the like button. If you have any questions about this video, leave a comment below. If you want to watch more videos like this, press the subscribe button. This is Books of the Stock Market, and I'll see everyone next week. Thanks.